Now, Arun Ramachandran asks, is it a good idea to invest in funds focused on Europe, or should he stick to the US when it comes to international exposure?
Well, I'd prefer the US allocation for your international equity side of the portfolio, or even the global funds. But then again, even the global funds would usually have a dominance of the US listed companies in their portfolios, and there are reasons for that. One is that the US markets probably offer the widest choice of fundamentally strong and globally competitive businesses. In fact, you'd come across several technology or consumer businesses which are even household names in India, but you cannot invest in them in the domestic markets. So getting exposure to these fundamentally strong global businesses is one reason why you should stick to the US markets. The second is on the exchange rate side, because remember, when you are investing in international markets, you are also indirectly assuming the currency risk. And from that standpoint, the US dollar happens to be the ultimate safe haven when it comes to currencies. So even from that standpoint, US markets make more sense. But one has to remember that with this kind of an international equity allocation, one has to take a more strategic view of things, because you would come across several compelling arguments, and there are expectations that after a sustained bull run in the US markets, it is about time that on a near term basis from here on, the emerging markets may outperform the US markets. But I believe that for your steady state long term allocation, there is still a very compelling case to be invested in the US markets.